Good morning and welcome to the ADS Securities Markets Update. Yesterday, the U.S. released the revisions of the industrial production's capacity utilization rate and the Philadelphia Fed Manufacturing Index, causing a notable USD sell-off against most of the major currencies except the British pound. But however, this morning, the British pound also gained across the board. However, the revisions came in were shockingly weaker, as most of the figures were revised lower, and some of them have also been revised from growth to a decline, which increases the chances for the growth figures of 2012, 2013, 2014 and the first quarter of this year to be revised lower again. In 2012, the industrial production has been revised lower to 2.8% instead of 3.8. The 2013 also was revised to 1.9 instead of 2.9, and 2014 toward 3.7 instead of 4.1%. Finally, June's industrial production also of this year was revised lower to 0.2% instead of 0.3%. The capacity utilization rate unexpectedly revised sharply lower from a growth towards 78.4 in June to a decline of towards 77.8, and this means that the rate has been declining since December of last year until today, reaching the lowest level since January of 2013. The Philadelphia Fed Activity Index also declined sharply to 8.1 in July, down from 54.1 in June. The new orders also declined sharply to minus 5.4 in July compared to 27, or growth of 27 in June. The full-time jobs also fell to 5.4 from 24.3, while the sales tumbled to minus 21.6 compared to a growth of plus 32.4. Finally, the 6-month outlook index remained unchanged at 81.1. Despite all these figures, we maintain so far our neutral outlook toward September's rate hike as we wait for more evidences. As we noted in our report yesterday, the US dollar index also failed to test its trendline resistance, which basically stands at 98.5, a trendline which also, and it declined back toward well below its 97.50 support area, which also right now is basically switched to a support. The daily close seems to be very negative, or at least we had a bearish engulfing candle, which also possibly to see more downside ahead, especially after again the pair also, or the dollar index closed the day well below 97 support area. For now, or for the time being, also the oscillators are crossing over to the downside again, which basically support our short-term negative outlook. As for the Asian session today, there was only one economic release from Australia, which had a notable impact on the Aussie across the board. The quarterly CPI increased less than expected, rising towards 0.7% in Q2, up from 0.2% in Q1 of this year, while the estimates were to rise towards 0.8%, and this is, however, the highest inflation rate since Q4 of 2013. However, the trimmed CPI also declined slightly towards 0.6% after revising the previous reading higher toward 0.7%, and as a result, again, the Aussie tumbled across the board right after the announcement, but the Aussie dollar also declined to as low as 73.80, down from 74.40 from yesterday's close. However, following the news, yesterday's positive close suggesting a possible upside retracement, especially after we close the day with almost a positive candle, which in addition to that also the technical indicator, or the technical oscillators, are crossing over to the upside, which also suggesting more upside and may test 75 or 0.75 towards 0.7533 in the coming hours. Going forward to the European session ahead, we wait for two economic releases today, beginning with the Bank of England MPC meeting minutes, which likely to show a positive tone regarding a sooner rate hike, which should support the British pound further. And also, in addition to that, yesterday the British pound also remained well supported above its 50-day moving average since the end of last week until today, with no clear breakthrough that support. Moreover, the possibility of another decline toward the levels that we mentioned, or that we noted yesterday, remains the same between 1.55, which is the 50% retracement of the recent rally, and 54.60, which is 61.8% from the recent rally. But however, the general outlook remains positive as far as the pair continues to trade above 53.30. In addition to that, in Italy, the retail sales will be released today, and the estimates are to rise by 0.1% in May after rising by 0.7% in April. As for the US session today, we wait for two economic releases, including the house price index and the existing home sales, and both are expected to show a better reading for the previous months. Despite these figures, again, the market may continue to trade within a tight range throughout the day. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.